Open your cerebral cortex and shift your lobes into upper beta phase, because you are going to have Bitcoin knowledge transmitted directly into your vestibulocochlear. Your host at Bitcoin Knowledge is Trace Mayer, an early Bitcoin advocate since it cost $0.25, but this is not intended to be investment advice. A doctor of jurisprudence, but this is definitely not legal advice. And an investor in core cryptocurrency infrastructure, including Armory, BitPay, Kraken, and Mitagio, but this is not a recommendation of those services. Here, you get fed via direct mind download with pure and free Bitcoin knowledge.
Welcome back to the Bitcoin Knowledge Podcast. We have a very fun interview today. It seems a lot of people just really enjoyed, like when we had David Tice from the Prudent Bear Fund on, talking about Wall Street and investment, and also John Rubino, author of The Money Bubble and the Collapse of the Dollar, just talking about the general economic environment, all the trading opportunities. So I figured we'd do something a little bit different. Instead of interviewing specifically on like somebody's business or what they're working on. Instead, let's talk about the overall macroeconomic picture, the Bitcoin specific news for the week, and then also some of the trading fundamentals and technicals. So to help me out with that, we have Kevin Zhou. Welcome to the podcast, Kevin.
Hey, Trace, how's it going?
Great. Now, you'd actually done some of this work when you were over at Buttercoin as their chief economist, right?
Yeah, that's right. So, every week I'd publish a little blog post about, what's going on in the week, how the markets look, just some of my thoughts.
Yeah, just, some of the fun stuff. So let's dig right in. Like, the big picture, we've had China and the currency devaluation. Maybe you could go in a little bit on how you think this applies just to the global economy, and then a little bit about how it applies to Bitcoin specifically.
Yeah, so, I think, with this recent devalue, the whole point of it, I think, is to keep exports up in China. Recently the stock market also crashed over there, and the government's, I think, a little bit worried that there might be let's say like riots or protests on the streets. So, since the stock market's going down, a lot of people are getting disgruntled. And at the same time, with a strong yuan, exports aren't going to be as good as they hope. So I think, they want to export some of their troubles out of China. And, the devaluation was very modest. It really wasn't that much. But it's sort of a signal of maybe things to come. And if that's really the route that China wants to go, then, in some ways, all the other countries in the world, they either have to join China in that sort of devaluation race, or, they can just accept the fact that, their exports are going to suffer. So I think, since everything's really globalized right now, most economies in the world aren't really doing that hot. So, if it's a matter of sort of exporting the protests from your own country away to a different country, I think a lot of governments will do that. So if we get into this sort of cycle where, China's devaluing and then let's say India joins them, a whole bunch of other countries join them, then it seems to me that the way it would affect Bitcoin and any precious metal, sort of like commodity money, would be that those would be the things that would gain in value, and fiat paper across the world would just lose value in this sort of like trade war kind of cycle. It's not that definitely going to happen or anything, but it's just a thought. I mean, if it did go that direction, the likelihood of Bitcoin going up would probably be pretty big.
Yeah, so we got this kind of backdrop, you could say, of de-dollarization happening by the major countries out there, and then everybody engaging in their own versions of quantitative easing and just rampant monetization of the debt. And do you think that China took this flash crash that happened on the Dow as an opportunity to sell U.S. Treasuries? Because I think they sold something like $100 billion of U.S. Treasuries in the past week. Do you think that they're kind of taking advantage of just the general market volatility and turmoil to get themselves out of the dollar?
Yeah, as I understood it, what happened was that when they devalued the yuan, it further slid in the market to a point where they thought it actually had become a little too over devalued, and they sold the U.S. Treasuries as a way to sort of defend the yuan after they were the ones who sort of started the devaluation. So that's how I understood it. But yeah, I mean, I think the general trend of de-dollarization has been happening. Especially from China. I mean, I guess they're sort of realizing that they took on so much like U.S. debt, become like decorrelated with the state of the U.S. Like if they really want to grow and upseat the U.S. at some point, that's something that they have to do eventually, right? So I think they're just sort of getting started on that now.
I mean, it's just very fascinating because so much of the Bitcoin economy is actually tied over to China, and we'll get to that a little bit later. But volatility, we've also seen a lot of volatility in Bitcoin. And I think some of this might have to do with the fundamentals. This Bitcoin blockchain size block debate thing. Can you maybe give us a little bit of an overview, like what's happening here in terms of the fundamentals with this Bitcoin proposed fork and block size debate and just all of this noise? I don't know if there's too much signal yet, but like what do you what's
on that
going
note,
on here?
I think with that with the stock markets crashing and the yuan devalue, if it wasn't for the fact that Bitcoin was in civil war, we might have even seen the price go up. But right now it's just it really is in some ways civil war. I mean, you have a lot of these really talented people, core developers, all of them just disagree with each other. Brilliant in their own right, but nevertheless they can't come to any sort of consensus. And I think it's kind of funny that maybe these bankers now, folks on the street, they're having a good laugh that our experiment about like decentralization, we're finding it hard right now to reach consensus in the community. So they'll have a laugh. I think everything will get resolved out, but right now it's sort of just this debate on first of all, whether or not we should lift the block size, and then given that we should, how do we do it? Do you have these blocks that, let's say, according to BIP 101, they double every couple of years or after a set amount of time, or BIP 100 where blocks can, there's no real hard cap except for the I think the hard cap is maybe like 32 megabytes, but basically miners get to choose and sort of vote with their hashing power on what they want the block size cap to be. There's a lot of debate on like what's the best way, and those are those BIP 100 and 101 are just two of the sort of the most popular Bitcoin improvement protocols. But you also have like 102 and 103 and a whole bunch of other ones that I don't even think have been specified as BIPs. For example, like 102 would be that we just raise the block size cap to 2 megabytes from 1 megabyte, and then kick the can down the road. Maybe have another hard fork later once we run up against that limit.
So a BIP, like what exactly is that? I mean, why does that even matter in this whole discussion?
To Bitcoin and the block size debate, it's that these blocks are starting to get really full, and they're limited to 1 megabyte in size. So in order for us to have more transactions per second on the blockchain, for it to really be a payments mechanism, a medium of exchange, 7 transactions a second really doesn't cut it. I mean, compared to like Visa, MasterCard that are doing, I don't know, was it thousands or something like that? So, there's that question. And what the BIP is, so the BIP is, it's short for Bitcoin Improvement Protocol. And, there have been a number of them in the past, and it's basically a way for people to suggest and to spec out a way to improve Bitcoin. And there have been a lot of proposals so far. from everything from whether or not we can have dust transactions in the network, as in what's the smallest amount of Bitcoin that you can send that'll be accepted by the miners, to other things, security related things, to how big the block size should be. So all of these things are basically suggestions on how to improve Bitcoin.
Yeah, because it's not like we can do a gold improvement procedure and make gold, like extensify gold and change its actual structure and how it works and make it more useful. For example, Alan Reiner and Greg Maxwell had worked on hierarchical deterministic wallets, and I think that became one of the particular BIPs. And then HD wallets and multi-signature and pay to script, like these have all gone through this BIP process, which is a way for all the developers to kind of hash out, like no pun intended, hash out the argument. And so I guess what's interesting about this block size debate is that Gavin and Mike never really created a BIP at all. Just very recently did Jeff Garzik create, I think, what is it, BIP 100, which is getting a lot of the support. But it's just kind of interesting that, with a fundamental change to the protocol, the developers have been going through this BIP process for 7 years now, 6-7 years, and yet like Gavin and Mike want to just release software that hasn't been tested and hasn't been proven and haven't had significant simulations run on it. They just want to release that out. Well, they have released it out into the wild, and it's just different from how the process has worked in the past. Do you think that that's adding confusion to the people looking in from the outside, like all the bankers kind of looking in from the outside, like, oh man, look at all these cats trying to get herded?
So yeah, I definitely think the confusion really hurts the price. I mean, maybe it's at some point, if we could come to any sort of consensus, regardless of which way it went, I think the price would start to stabilize out, maybe go back up. And I think, with this whole block size debate, I also feel like there's a lot of mixed conflicts of interest. With folks in industry right now, all the exchanges and merchant processors support larger blocks, because it helps their business. More blocks means more merchants. It becomes more viable as a payment mechanism, and then also for the exchanges, more volume for them. At the same time, you have folks like Blockstream who are very much in favor of keeping the block size small or being less heavy-handed in its increase, because it makes their business more viable too, right? Because they can do a whole bunch of stuff on side chains that wouldn't be possible on the Bitcoin core protocol. So, on one hand, there's a lot of intellectual disagreements, but also from an incentive standpoint, people have a lot of conflicts of interest on, there might be it might call the question why some people support one side versus the other. So, this whole thing has been a messy affair, and it really is civil war in Bitcoin right now.
Yeah, is increasing the block size really the salvo though? Dr. Woolley just put out a kind of a innovation in the math where you can fit 9,000 times as much data or whatever it is into the same size of a block. Couldn't a lot of these businesses just actually figure out creative or clever or innovative ways to use the current block size without just immediately running and raising the cap, which comes with its own set of costs, because miners have to store it, bandwidth has to transfer it. It makes it less usable for the individuals to be running full nodes if we had 20 gigabyte blocks or 20 megabyte blocks or whatever size we want to make. Wouldn't it make more sense to? And is it even ripe? Because it seems like only half of the blocks are being used right now. Only about 500. Half a meg. So is it even a ripe issue that has to be decided right now?
Yeah, maybe you're right. I mean, maybe it's something that maybe we don't even need to deal with, right? But I think it's for me, it's and I think for some some folks have brought this up. It's not really a matter of whether or not the block is this size or that size. I mean, in the end, to have a functioning fee market, the real question is whether or not the blocks are full in the end game, right? So that there can be a competitive and healthy fee market. And I think that's still left up, in the air. And I don't think we're going to get to anything conclusive there for a while. Whether the block is actually 2, 4, or 17 megabytes or whatnot, I mean, it's a temporary thing about whether or not we want Bitcoin to be a medium of exchange in the immediate term. In the long term, whether or not it proves out to be a store of value, I think still depends on if the blocks are full or not. So it's more like a Boolean question, right? Is it full or is it not, rather than what is the actual size? What is the actual cardinal size of the block?
Yeah, so I mean, it's just a fascinating debate and industry because we've never really seen this happen before, right? Like in any other industry.
Yeah, I mean, in some ways, once we're through all this, I think we're going to all be better for it, and at least we'll know, how consensus was finally reached in a protocol completely decentralized, where it does actually seem hard, right? I don't know. I think we'll see. I think we'll see what happens.
Well, I think that's the general reaction from most people.
Yeah.
Just a sigh, and I don't know.
Isn't it though? Huh?
It makes it kind of fun, though, right?
Oh yeah. Fascinating stuff though. Even just the discussion is very fascinating. I just wish that we'd come to some sort of consensus quicker. That's all.
Yeah, and it's not. And at least, me looking at it, I don't want some rash decision made. I want it to be very thought out from every angle. The last thing we need is to have, like Mike Hearn's first commit to Bitcoin caused a hard fork. Fortunately, Dr. Woolley fixed it within a very short amount of time, but the price still crashed over 30-40% just in a matter of an hour or two. And, that's the last type of thing we need, is some hasty, untested, unsimulated, not solid computer science or technology, especially when there's warnings from, multiple PhDs and in these very complicated technical subjects saying, hey, this is a bad idea. As an investor, I mean, I just kind of look at it. I'm like, I think we need more engineering and less noise and less politicking and less posturing, because these are tough issues that the industry is deaing with, right?
Yeah, absolutely. But it gets even messier when the engineers are the ones that are starting to politic because they have their own interests, at stake in the companies that they've joined. So. That gets a bit messy too. But no, I agree that it really should be based on reasoning, first principles, and just the real hardcore technical analysis of what's really going on, what's really at stake.
It makes you wonder, like, what was it like in those early days of Google or eBay or Amazon or PayPal? Like what were some of the really tough decisions that had to get made, and like how'd those decisions get made? Because, here it's all the laundry is hanging out for everybody to see, right?
Right, exactly.
So switching gears, what about the current price? Like, why do you think the price is kind of humming along where it's at, and every time it seems to want to go lower, it seems to just bounce back pretty resiliently? Have we hit a bottom? Like, what's going on?
Nobody really knows, but I think that we're pretty close to the marginal cost of actually minting a coin, and I think that's important because these days a lot of these big miners have engaged in, they've sold futures contracts, let's say maybe like a month out or 3 months out, and they have these obligations to basically pay out Bitcoin sometime in the future. And I think that there's sort of this miner's put, right, where it's like, if the price goes, sufficiently down, at some point the miner is going to realize that it's more worthwhile for him to just buy coins in the market to fulfill his future obligation than it is for him to continue mining at a loss. So there's always some sort of this floor, for that the miners are sort of supporting for the ones that are engaging on all these futures contracts. So, and since miners are moving more towards futures contracts, because it makes more sense for them, right? I mean, all their costs are in electricity, and it takes some time to mine out the coin. Why not hedge off, the volatility in the middle? It totally makes sense for them to be selling these futures. But as a result of this, it also gives some sort of bottom floor to the spot market, because miners can just buy it up in the market if it's cheaper than what they're producing the coin at.
Well, I mean, we see a similar dynamic in the gold markets, but just because somebody's willing to, just because it costs $100,000 to dig a hole in the ground, doesn't mean that whatever you got out of that hole is worth $100,000 to the market. So, I mean, the assertion's not necessarily that the cost theory of value, but instead,
Right.
you're saying that.
Well, I'm not a communist. I don't really believe in the labor theory of value.
The labor theory of value. So,
yeah,
so you're talking about.
But yeah, I think
like the time value of money and dealing more with regulating production over time through the interest rate of Bitcoin, and this is beginning to get developed out in the forwards and futures markets. Is that kind of what we're talking about?
Yes, sort of. So I guess what I'm saying is that, regardless of whether or not it's actually a good idea to convert electricity into these cryptographic tokens,
well, the market
the fact
says it
is that
if it's profitable.
Well, the market definitely, the market definitely says it is, and I think the market's probably right most of the time. I guess what I'm saying is that for the miners, it's not a matter of whether it's a good idea or not to convert electricity into these coins. If they have already engaged in these future contracts and they have obligations in the future, then either they have to mine coin, which may be a good or a bad idea, or they have to buy coin on the market. So because they have those two options, they're just going to choose whichever one is cheaper. So given a price that just keeps free falling, I know at some point it's just going to be really good for them to just buy it on the market to satisfy their future obligation. So, and I think, going off of that, I mean, what it is that maybe at the most fundamental level, like as a numeraire, as a true unit of account, like energy seems like the most fundamental, physical thing to use. And as a way to sort of measure productivity, if we can, use less energy in a process and produce a higher quality good than before, or more, a higher quantity of goods of the same quality, it seems like productivity has kind of gone up, right? So these cryptographic tokens that sort of represent energy burned, whose replacement cost is actually, that energy being burned at, whatever current hashing rate versus difficulty it is. It almost seems like it can just serve as like a benchmark or a standard or some type of numeraire upon which like productivity can be based. Maybe that's really what the value of Bitcoin is. Maybe that's where it's actually deriving its value.
Well, and you also
it's getting a bit abstract and philosophical, but yeah, I think maybe there's something there. I don't know.
Well, and it's not just energy, because energy is difficult to store over time, and even if we're going to look at energy, we've got waves, and those waves are measured in time. And isn't that really what we're trying to deal with? Is we're trying to regulate production over time, and so the numeraire, the more we can get it tied to time, the more accurate we're going to be able to measure and perform economic calculation.
Yeah, I think you might be right on that, and I think that the real danger though is that when we have a numeraire which is flawed in some way, it's almost like kids in school, they study for the test, right? And they don't really actually learn anything. They just like do exactly what they need to do to pass the test. And it may, the world may be a little bit like that right now, right? If you think about it, like if actually unemployment was the only consideration for a healthy economy, there's a lot of ways to get unemployment down, right?
Well,
like you could just like have the government have these huge programs which hire people to dig. Right, war is a great way, for example, right? But it goes back to like it's a French economist, Frederick Bastiat from, I think, the 1600s, and he gave this analogy, which is, I think it's called the broken windows fallacy, and it's this idea that, in a town where, let's say there are a lot of people that are great at fixing windows, and that's their line of business. To drum up business, if you just threw stones on, through everybody's window and just broke everybody's window, surely, there'd be a lot more work for everybody to do. But that isn't true productivity. I mean, you can't get anything from destroying things.
Yeah, it doesn't actually create any additional wealth for society.
How our capital gets allocated, and it could get allocated very badly, right? Because the measure in which we base our performance, we base whether or not we're successful is, could be entirely flawed. But maybe, the truest numeraire is, this idea of energy burned, or a token representing energy burned with replacement cost of more energy being burned. So I don't know. Maybe there is something there.
Well, something fascinating for us to consider on another podcast. Anyways, thanks for being with us and putting up with some of our technical difficulties. It seems like one of our internet connections hasn't been very good. Anyways, we've had Kevin Zhou, former chief economist for Buttercoin, with us to talk about the Bitcoin news and trading for the week of August 23rd through the 29th. Thanks for listening.
Be sure to get a copy of the free Bitcoin Guide at freebitcoinguide.com. Got a question or suggestion? Record your voice at bitcoin.kn. Don't be shy. To help the show, share bitcoin.kn with friends, post about it on Reddit, and otherwise spam the interwebs. Your iTunes comments and 5-star reviews are very important to us. Please continue tuning in to the Bitcoin Knowledge Podcast, where we release interviews with the top people in the Bitcoin world. Now take some choline and let that Bitcoin knowledge consolidate.